Welcome to Aha Math and Science. Well, it's time for the weekly summary again. So today I'm going to talk about a glimpse of hope and what I mean by that. So before I get started, I just want to thank everybody who has been watching this channel for your support, and that's really kind of important and means a lot to me and give me the motivation to continue making good videos and share my analysis with you. And also, I want to say that, in the market, patience is really kind of the key, to success, to whether it's investment or just trading, stocks. So it's really kind of like, we are all kind of students of the market, and each day myself kind of learn always something new, from the market. Well, without further ado, let's get started. So first, just a quick summary of the market. So on Friday, all the indices were in the red, just kind of a small, a fraction of 1%. They all kind of lost about that. And then the VIX was up about like 5%. But actually for the whole week, you can see all the major indices went up more than 1%. And the VIX was down like about like a little over 1%. And what is really kind of interesting and perhaps notable is on the weekly chart for the SP 500, as you can see, it closed at 4191.98. That was actually the highest weekly close since August of 2022. So it took all the sort of previous highs and had the highest weekly close since August of 2022. And this really kind of speaks to the strength of the major index, not just SP 500. The Nasdaq already kind of made a new high, and kind of started to approach also the August of 2022 high. So this really kind of a sign that says, like, at least for the near term, perhaps there's more upside room to go. And in fact, in the, I guess 2 days ago, I made this video talking about this ratio of the small caps to the larger caps, which is using the Russell 2000 and SP 500 price to represent the small caps and the larger caps kind of respectively. And we plot this ratio of these two index. And this is what it actually shows for basically the, on more than like 30 years, and since like the latest 80s. You can see that currently, well, we are kind of having this ratio was kind of at a very low level, but it was slightly higher than actually the low it made during the pandemic, which is March in March 2020, and it's already kind of see that it's kind of in this uptrend. So at least it's kind of making a high lows. Now this ratio is kind of rebounding if you look at closely in the past few weeks. And then you can also see there's a spike here, meaning that there's a very quick sort of strength of the small caps versus the larger caps, because this ratio just kind of increased sharply. When the ratio high, meaning the small caps kind of outperforming the large caps. And the same pattern also occurred in previous bear markets. This was during the great financial crisis. It's kind of making these high lows, and also with a spike after this low that it was made. And then same thing happened during the burst of the dot-com bubble, where it had made this all-time low, and then you have a spike, and then this ratio is kind of up, trending upward. So we also kind of point out that it is actually during these recessions, which is when this ratio started went up, and that was during the 2008 great financial crisis, and during the 2000 bear market. You can see this is correspond to the recession period when this ratio is also moving up. Small caps are outperforming the larger caps. In this case, you can see that this recession occurred after this spike of the small caps outperform the larger caps in a very short period of time. Now, we maybe also kind of see that signs for an incoming recession or economic indicators that are pointing to that. So, and it won't be surprising that we may have a recession at here, but then it's also not uncommon during the recession that the small caps to outperform the larger caps, just like the previous two bear markets. So we suspect it won't be surprising that actually when the recession hits, we will see the small caps start to outperform the large caps. In fact, this is almost kind of like a precondition for the bear market to bottom, because all bear markets kind of bottom that after you can see these trends kind of small caps start kind of outperform the large caps. This is when the recession, the bear market ended here. For the 2000 bear market, it ended actually at here, at the end of 2002. So it won't be surprising to see the small caps outperform the larger caps during this session. In fact, this pattern here, you have a spike here, then I have a recession, is very much similar to the bear market in 2000. So let's take a close look of this bear market and then compare with our current case. And so in 2000, you can see that after this initial phase of bear market, the small caps were kind of stuck in this range, this trending range, kind of go sideways for more than a year. And then basically during this period, you can see the small caps kind of rebounded very strongly, and you also outperformed the large caps, which is kind of on a declining path. And then just before the final leg of the bear market, which it made all-time, we made a very low here, you can see that actually what happened is the small caps rebound sharply right here before the final leg of bear market kicks in. So this is something that we want to keep in mind, that whether something like this, we also start to kind of repeat, So we look at our current bear market, you can see this is the initial phase of bear market. And then for almost a year now, which is since like June, July of last year to the present time, the last 2000 were kind of stuck in this trending range, including also the larger caps. Now, if history is any guide, then it's possible before the final leg of the bear market, the small caps may rebound sharply to the upper bound of this side range box, so somewhere here. So that indicated there's another 15% of room to go up for the small caps. And then at the same time, the larger caps may also go up, but it's going to be underperform the small caps, so that the ratio of the small cap to the large cap is going to still move upward. So this is something interesting, just looking at the small cap versus the large cap and the relative performance of the two. Another indicator we found also interesting is actually the 10-year treasury yield. So prior to actually the bear market start, which is the beginning of 2022, you can see that whenever the treasury yield is going up, the index is also going up. And then when the treasury yield starts to go down, the index, the last 2000, which is this blue curve, is showing weakness. Yield is going up, the index is going up. So this is a positive correlation. And then this positive correlation kind of broke down after this bear market started, all the way until like October of 2022. You can see during this period, we actually see that the yield is going up, the index is going down. The yield is going down, the index is going up. So this is really kind of a negative correlation between the yield curve, the treasury yield curve, and the last 2000 performance. And then after the October 2022, it seems to start to revert back to the positive correlation. When this yield curve is going up, the index is also going up. When the yield is going down, the index is also going down. Yield is going down, index is also going down. Not just the past week, you can see that the yield was kind of stuck in this trending range for several weeks now, almost like 2 months. But then now it just broke out of this trading range. So this could indicate that the yield curve is about to break up this trend line here. So it may actually go up here to all the way to kind of test the previous high. If that's the case, then it's highly possible that the small caps will kind of follow up and then also start to kind of go up. And so this analysis and then the previous analysis about the small caps and the large caps all kind of pointing to the same conclusion is really interesting. Because when we do the analysis, we want to see actually multiple sort of evidence pointing to the same conclusion. And then it makes the story, really the conclusion, more robust. And we can see that this is what's happening now. What about in 2000 during that bear market? You can see this is when the market topped in early 2000. And the yield curve was also in this downward trend. And then somewhere in early 2002 or late 2001, the yield curve started kind of break out right at here. So the yield curve started to move upward and break out this downward trend. And then it kind of moved sharply high. And at the same time, you can see the Russell 2000 just followed suit. It also kind of went up. And that's where actually the sort of the final rally is for before the final leg of the bear market starts. So you always see this final very sharp rally of the small caps before the final leg of the bear market. And this is something really kind of interesting, and we want to keep in mind. And this kind of the quicker rally of the small caps and as well as the moving up the yield curve is basically some kind of reflection of people's basically people are getting more optimistic about the economy. That's why the yield curve is going up. Also, the small caps are kind of outperforming the larger caps, and that kind of perception is also reflected in the dollar index. As you can see, in the middle of April, we pointed out that the MACD histogram on this channel. You can search for some previous videos talking about the dollar index. You can see that the MACD histogram turned from negative to positive. That at that point we called for the dollar to actually, the dollar index probably have more upside room. And indeed, that's what happened in the past few weeks. So this is another collaboration for basically, investors becoming more optimistic about the economy. And this could last for a few months, and before people start to realize that actually a recession is inevitable, and then the corporation earnings are coming down, and that's the final leg of the bear market. So really kind of to summarize, multiple sort of indicators started pointing that we might be see kind of the final rally for the big to go before the final leg of the bear market. So this is our basically kind of conclusion for today's kind of summary, which is the Russell 2000 may start to move up, sharply up actually, and get to the top of the box. And then at the same time, the large caps may also show some strength, although that it could like slightly underperforming the small caps. And that's when this is all over. And that's when actually the final leg of the bear market started kicking in. And that's really what I mean by a glimpse of hope, which is basically we are starting to get close to really the end of this bear market, because you have to have this phase of the final rally before the quick, a sharp drop of the, which is like really the last phase of the bear market. And so, if this indeed kind of plays out, then basically we just need to get ready, and this will provide a perfect long-term investment opportunity. So I hope you have enjoyed this video and find the information presented here interesting. Certainly, technical analysis is never 100%. Again, there's a lot of complex issues at play, and things can shift quite rapidly. And so, please make sure try to kind of stay alert, and also always put the kind of risk management at the top. So again, your support really means a lot to this channel. Please do not forget to click the like button, and also to subscribe to our channel so that you can actually get analysis and on regular basis, from this channel. And thank you for watching.